Properties. It's from Supratik Gupta, who's writing in here from Mumbai. He's writing in from Goregaon. Godrej Properties bought at levels of 1466. He's asking for the prognosis of the company. Mr. Choklingam, this one's for you.
I would rather, if there is small recovery also, you can sell Godrej Property and buy Oberoi Realty. In fact, we have a buy recommendation on Oberoi Realty. I am saying this because balance sheet is much stronger for Oberoi, and the delivery also has been great in the recent time. And recently, last 2-3 years, they have purchased a lot of land, which are going to be converted into real estate and delivered. Right now, all of us know that the real estate price already shot up minimum 10% in Mumbai. So all this would augur well for Oberoi Realty. So my strong suggestion is to shift to Oberoi Realty.
All right. I hope that also answers your query, Neha. But nevertheless, since I think she's asking for 3 to 6 months, so let me take this one to you, Kunal. This one is also on the real estate space. And what Neha is saying that she's already holding Shobha, Godrej Properties and DLF in the realty pack, and she's already making some loss of approximately 20 to 30%. She wants to know whether she should average at these levels or because she can hold for the next 3 to 6 months. We saw the sharp rise in the realty sector. I'm unsure whether actually Neha bought it at the peak of that rally in the realty sector. But nevertheless, Kunal, what should her strategy be now?
So I think looking at the buy price and the current price for these stocks on an average, I think the viewer has bought at the higher end of the price range for these stocks. But then the question is that whether the real estate stocks have topped out and whether you would probably see these stocks going into a correction or a consolidation. My sense is completely different. I believe that we are into a very strong real estate cycle, and possibly over the next couple of years you should see the cycle turning much in favor for the stocks as well. You can maybe add these stocks at current levels, or if you want to add up to one more stock, even Sunteck Realty has been doing pretty well. In fact, the charts for Sunteck Realty are perched at a fresh 52-week as well as live breakout for itself. So it's a more stronger chart. You can look to average most of these stocks which you're already holding, or if you can look to add, I would suggest Sunteck Realty.
Okay. Tata Teleservices is the name of the counter. Girish from Trivandrum is asking this question. He's bought at levels of 152 and he's asking whether it's the right time to add to his holding. Mr. Choklingam, on the fundamentals, would you suggest a fresh entry at this point, or rather an addition at this point? I think you're on mute, Mr. Choklingam.
No, can you hear me now?
Yes.
I have looked at the fundamentals of Tata Tele. I am a bit shocked, why it is still trading at triple digit. There is no fundamental comfort at all, considering the balance sheet or accumulated losses. I would not advise him to add at the current level.
All right, so that's the view coming in on TTML. Moving on, Santi has a query. He has a query on PNG Health. 50 shares purchased at 3,930 rupees per share. Wants to know whether it's good stock to hold and add, because strong support is seen at around 3,900 to 4,000 levels, but not understanding the reason for the bearishness and the fall from the recent highs of about 7,500 rupees. So he wants to know what should the strategy be, Kunal?
Apologies, Cheryl, don't track the stocks, so won't be able to offer any comment.
All right. Mr. Choklingam, do you track this one by any chance, PNG Health?
Yes, I looked at it. It's a great company, no doubt at all. If he's losing money, he can hold on. He will definitely get it back. But why it has fallen? Its valuation was highly stretched, but that is not followed up by growth in the profit or revenue in the last 2-3 years. So that is a reason. But he need not book the losses. He can hold on till he gets the principal back.
So we've got a question coming in from Prasant, and he's asking about Axis Bank. Kunal, this one's for you. He's bought at levels of 645 and he's unable to look at the short term and see the trend, because he's wondering whether 680 is a target that he can keep for the short term. What's your view?
So you can keep that kind of a target for Axis Bank, but the only question is that the stock has been unable to break out over the very near term. So last 4-5 days, it's actually been struggling at the 640 mark. Today, for example, today's high for Axis Bank in the first half an hour or so, the stock had made was close to 639. From there, the stock has ebbed back again. lower, and now it's trying to make a clawback again. So I think till the time it doesn't break that 640, 645 hurdle, reaching to targets of 680 could be a bit difficult. But today the encouraging part is that the banking stocks are the ones which are only doing pretty well for themselves. So if the move sustains, then we can see a strong possibility that Axis Bank can break out the 640 mark.
All right, let's move on to the fifth query of the day. We've got Ashwin from Hyderabad who's asking Kunal for a fresh entry of HDFC. I'm assuming because he's talking about ICICI Bank and SBI, he's also talking about HDFC Bank. For a period of 6 months to 1 year, which would you pick?
So I think from a 6 months to 1 year period, I would probably prefer ICICI Bank and SBI. They could be two prominent stocks which can stand to gain significantly as well as start to outperform. We've seen both these names doing pretty well for themselves over the last 2 years, 2021, 2020 from post-COVID lows. I think those two periods is where ICICI Bank and SBI have managed to outperform significantly from majority of its other peers. So I would probably consider that these stocks going forward would replicate the same phenomena. I would prefer them, but yes, HDFC Bank is also a good quality stock, but 6 months may not be a ideal period for holding up these large cap quality names.
All right, this next query that I have is coming in from Varun Rao. And Varun Rao is holding Akzo Nobel 100 shares at the price of around 2,000 rupees per share for the last 2 years. He wants to know whether he should shift to Asian Paints or some other stock altogether. He wants a 5-year view. 5-year view is what he wants, Chokalingam, on this particular counter. Akzo Nobel is already holding it for the last 2 years. You think now it makes sense to move to Asian Paints or Berger Paints or any other company?
It's good to have 5-year view. Only those people make a lot of wealth. But then you should not be doing that without studying the outlook in the short to medium term. So,
guys, it is query number 6.
Pardon me?
Nah. No, please go ahead, Mr. Chokalingam.
Yeah. In the short to medium term, the paint industry will definitely have a problem because all of us know the oil prices have gone up. On the other hand, the major structural changes happening in the paint industry. The capacity build-up proposed by JSW Paint and Grasim is equivalent to 50% of the existing paint capacity, when the industry itself is expected to grow only 10%. So I would not suggest him to hold paint stock, nor shifting from Akzo Nobel to any other paint stocks. He can always think of any other sector to make money, and then probably after 3 to 6 months he can come back to paint stocks if they correct more than 10-15%.
All right, so that's the view on the paint space. Also, of course, there is that pressure on account of crude oil prices, right, Mr. Chokalingam? Let's talk about Naukri. We've got a question coming in on Info Edge. We've got Akshay from Bengaluru who's asking about this counter. He's seeing losses of about 25%, Kunal. What should he do basis what you're seeing on the charts?
See, near-term charts would still indicate a lot of pain coming back for Info Edge or Naukri. In fact, on the monthly charts, the stock has broken what we call it as typically a bearish head and shoulder pattern, and the breakdown for the stock was around 4,300, 400 levels, and from there the stock has shed another 800 to 1,000 odd points for itself. So the correction is getting steeper for Naukri or Info Edge. I would ideally wait out for the stock to come back about the 4,200 mark at least. That will be the first strong breakout point for Info Edge or Naukri. Till that time, you can wait and watch. Possibly over the next 3 to 6 months, if the markets and the changes its course, there is a possibility that stocks like Naukri, Info Edge, etc., these stocks may make a comeback for themselves. So, but I would suggest a buy only if the stock breaks out above the 4,200 mark.
All right. I believe I have to take the next one. So I'm stealing all your queries.
Exactly. Just because I've stolen his attire today and I've made sure that I match him today, he's not letting me talk at all.
I'm sorry.
Well, let me take this one. Is from Amy, and she's bought Goodyear India at around 880 rupees per share levels, and now she's thinking that it has given a falling trendline breakout on weekly charts. So wants to know technically how does Goodyear look to you actually, Kunal?
So I think it looks attractive, and the falling trendline breakout is actually a correct pattern analysis for Goodyear. The stock is at 1,030 plus levels currently. The only concern again for these kind of stocks is the low liquidity. So that is actually a hindrance for investors to try and take larger sums, because when you have such low liquidity kind of volumes, those volumes, they get sucked down when the prices actually go into a correction mode or the market gets into a correction mode. So exiting those stocks becomes a lot more difficult. I would still suggest that if you're holding on and if you bought at lower levels, you can continue to ride on to your trend on the upside. Trail your stop losses to maybe a 970, 955 for Goodyear.
Okay. Mr. Choklingam, I'm coming to you next for this next counter. We've got Akash from Delhi who's asking about Ganesh Benzoplast. I do not know if you have a view on the stock. He's bought at levels of, I believe, 121.6. If he should not hold this, can you give an alternative?
See, this uses derivative of crude oil, and secondly, the valuation also quite stretched. So I believe that the market would be quite weak for at least another 2 months, if not for 2 quarters. So therefore, instead of investing in such a small cap, you can go to FMCG stock like ITC or 3M India or Nestle. Why I'm saying is that in the last Fed rate cycle, post Lehman crisis, FMCG sector was the only sector which outperformed, fell least. So similar kind of fear is there for me. So therefore, I would suggest sell this kind of small cap dependent on oil derivative and shift to FMCG stocks.
All right, this one is coming from Devi Das, and Devi Das has bought L&T Infotech at a price of around 4,327 rupees per share. Wants the view on this particular counter, and also wants to know whether it makes sense to average at current market price or should wait for some more correction. Kunal?
Well, I would suggest to wait out for some more correction. I've been advocating this since quite some time that many of these IT names, they probably would have more room on the downside, and possibly another 5% to 10% as an average correction could be possible into these names from the previous swing lows as well. So I would suggest a wait out before you look to average.
All right, gentlemen, do stay with us. We have to slip into a very quick break. Viewers as well, we're going to take queries after this break, so do stay tuned.
I just heard your introduction, and what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
Out of this cup of coffee, is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And yes, as promised, we will continue to take your queries even now post-break. So let me get going with the queries. And this one is from Manish Raju. And he's saying that he's holding 100 shares of Lakshmi Organic Industries, purchased at 487 rupees per share. He's currently at 40% loss on this counter. Now he wants to know what should he do, Kunal?
Well, I would suggest that hold out for some more time. I don't sense a major recovery coming back into the stock over the very near term. You know, its price, I think that's up to 300 levels for itself. Maybe give it some more time, assess it over the next 2 to 6 months. If the chart patterns improve for the stock from current levels, I believe then there could be a case where you may look to buy at much higher levels. So I think 325 could be a point where you can look to average further, but at current levels, I would suggest a hold.
Okay. Mr. V. Ramchandran from Chennai has bought 1,000 shares of BEL at levels of 247. He's asking for a view for the next 6 months, Kunal. What's the view on the charts?
So I'm extremely bullish on BEL. I think it's been one of the much better and the much stronger, consistent performing PSU stock. In fact, even at current levels of 230, 235, when you look at it comparatively with many of these other PSU names, the stock has been managing to hold significantly above its 200 DMAs and the 50 DMAs, etc. So that's a very strong sign that the stock is consistently outperforming and still remaining to a positive trend. Over the next 6 months, I think if the trend resumes for the market on the upside, then I believe possibly BEL can even come back towards its previous major highs. 260, 255 I think was the previous high for BEL. That could be a potential target.
Okay, this one is from Narayan Nadkarni. IOC 700 shares, a purchase at 160 rupees per share. What should they do now? I'll take this query to you, Mr. Chokalingam. What's your take on IOC? Yes, crude plays a huge factor in these companies, right?
But there is always a fear that indirectly government might be the beneficiary of the cheap oil produced by the domestic companies. By PSUs particularly. So that is why these stocks get a very low valuation on the market.
Everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together...
There was quite a bit of news flow around that. Once the dust is settled, though, do you think that this bank is something that you should hold in your portfolio?
Not really, because the whole banking structure has changed. You have a lot of competition. Big banks have become aggressive. Then small finance banks have converted as a bank. NBFCs are eating into share of banking industry. So... And also you have many other private banks, small regional banks trading at a 50% discount to adjusted book value. So therefore, RBL, I believe, may not get a substantial premium more than what it is commanding now. So if he gets his principal or if he gets 5-10% profit, he can exit and move on to a larger private bank rather than staying invested in this bank for long term.
All right, this one is coming in from Sagar and he wants a technical view on Shalimar Paints. He's bought about 4,200 shares at a price of around 56 to 60 rupees per share levels. And Kunal, he's saying that he's bought it at those levels because significant delivery buying and volume activity was seen in this particular counter at that point in time. So he's expecting a target of around 180 to 200 on the upside. Is it possible?
Yeah, I think it's doing pretty well, and much unlike many of these other paint stocks, this is the one which is actually making a fresh 52-week high, in fact, a 2-year high for itself.
Together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in
action. Moving up higher steeply, the divergence would keep on increasing. That would probably result.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
He needs the long-term guidance to buy now or wait for which levels. I'm reading this straight from the chat, but he's asking for the best levels to add for the long term. On the fundamentals, Mr. Chokalingam, how does it look?
Any further decline he can add. He doesn't have to rush today because all these companies in some way they use the derivative of oil, and therefore short-term little negative, but it's a great company. And any further decline of 3-5%, he can start adding it.
Quick note for all of our viewers who are tuned in on YouTube. Yes, we are facing some sort of a technical glitch, and that's the only reason why we are actually switching on and off with the live feed. There's no other issue. Our producer has not asked us to take a break, so don't worry about that. Let's move on then. And the next query that I have right now is coming in from Ramesh. And he wants to know about BSE stock. He has about 1,000 shares purchased at 750 rupees per share. He wants to know whether he should average. What's your take on this one, Kunal?
I think it's a good stock. I think so. BSE, CDSL, CAMS, they tend to move in a very similar kind of a trend for themselves. But as of now, the last 3-4 months, have been a bit more downtrending for a stock like BSE. I would still expect that the stock may have some more room on the downside because the market sentiments have not been quite great, and at least over the near term, given the kind of overhangs we've seen across the globe, they could continue to linger on for some more time. So if you're looking at a buy on dips, that will be a better strategy for a stock like BSE and even for the other similar group stocks.
Kunal, I'm coming back to you. We've got Aarti who's asking whether she should sell Global Spirits, which she bought at levels of 1350, and Grinwell Norton, the cost price there is 1750, and should she buy Endurance Technology or JK Tyre from the tyre space for 1 year?
So I think out of the two names which you mentioned, Grinwell Norton is something which I would probably in fact expect to do pretty well. In fact, the abrasive space, if I'm not wrong, has done pretty well for itself. Vent and such other stocks have done pretty well for themselves. In fact, they are trading at a multi-year high for themselves. So probably there could be a chance where you might see Grinwell Norton as well doing pretty well. From the other names which you mentioned, I think Endurance is something which over the last few days has also sprung up on many of the short-term chart pattern breakouts as well. It's crossed the 200 DMAs, it's crossed the 50-day moving average as well. There are confirmations of price breakout for Endurance Tech. So that's the other stock which you can take a look at.
All right, this one is coming in from Rajesh, and he's stuck in Indiabulls Real Estate. Kunal, he has about 1,000 shares purchased at 155 rupees per share. He's asking for your advice on what to do with this counter. He's saying he has time for the next till 1 year to hold on to it. So what his strategy should be with Indiabulls Real Estate?
See, I think it's tough now, because from 155, the stock is at 60. It's already trading at a multi-year low. Now, you can look to, exit at current levels and shift towards a quality, real estate stock. That should be an ideal strategy for Indiabulls Real Estate. The only concern is with respect to levels, because, Indiabulls Real Estate is a very high beta name. So if the market sentiment, improves, say, over the next 1 month, there could be possibility that Indiabulls Real Estate can come to maybe 75 or 80, 85 kind of levels. So I would suggest to, look out for any kind of a rally, 20%, 30% rally as a good medium to try and exit the stock and then shift towards the names. Some of the names which I already enumerated, the likes of DLF, you can look at Oberoi Realty, even something like Suntec Realty looks very attractive from a longer term play.
All right, it is time to start the rapid fire segment. Gentlemen, you both know what this is about, so I'm just going to start. We've got Ramesh from Bangalore who's asking for a call on Man Infra. His purchase price is 77. Mr. Choklingam?
If he gets his money back, he should sell it, I believe.
Okay.
All right, this one is from Nino. He bought 500 shares of CRM Silk at around 160 rupees 2 years ago. Has booked partial profits as well at higher levels. Now has some more shares, but makes sense to keep it for the longer term. CRM Silk, Mr. Choklingam.
I would sell because textile industry suddenly turned negative, and also inputs are based on the oil, so it's a good sell.
Another one for you, Mr. Choklingam. SL Kumar from Kota is asking about 3i Infotech holding 4,000 at levels of 90. Can hold for 4 quarters. Any hopes for a turnaround in earnings?
I mean, if he gets his principal, he should sell it. There is no fundamental comfort at all in this stock as compared to other listed mid-sized IT companies.
Okay, Kunal, Jayakrishnan wants to know about IEX. Already has shares at price of 204 rupees per share. Wants to know whether should hold, sell or average for the medium term, and if average, at what levels?
I would suggest to hold on, not to average at current levels. The stock is falling very sharply. Possibly it can drop another 10 to 15%. That could be a good point where you can look to average.
Abhijit from Allahabad is asking about Adani Transmission, Kunal. This, he says, has risen over the last 3 days. He has 102 shares at levels of 2385. He's asking whether to book profits.
Book partial profits, trail your stop losses to 2400, and on the upside look out for 2650 as the next target.
Okay, Ravi Chandran is writing to us from UAE. He's saying that he's holding 50 shares of HDFC AMT at 2500. He's saying that he can hold for a year or two. Should he average right now, Kunal?
I think it's a good time where you can look to average.
Okay, HDFC Life July series. July series?
Next.
Okay, so July series call 620. What should the strategy be? Manikandan's asking.
So I think you can look to buy, but I think I'll prefer rather than 620, bring it down significantly to maybe a 580 or a 600 at max as the higher strike of deep out of the money call option.
All right, Kunal, just for the benefit of our viewer, Sagar, he had asked about Shalimar Paints. Our live got disrupted at that time. He wanted to know if upside of 200 is possible on that counter.
So as I said, 180 plus could be a near-term target, but then in such kind of a stocks, it's very important to have a trailing stop-loss mechanism.
All right, and with that, we come to the end of the Rapid Fire as well as Queries segment. Thank you so much, Mr. Chokalingam and Kunal, for joining us on the show. And Kunal, yes, tomorrow is BNSN Pathshala, so what do you have in store for our viewers then?
Well, I'll probably go back to the history of candlesticks, so almost 250 years back dated, and I'll probably try and give a glimpse of how trading used to be done in those points of time.
Without charts?
Without charts.
Wow, okay.
Very interesting. So tomorrow at 11 a.m, you know where is your destination. It is ET Now, it is Buy Now, Sell Now, and it is BNSN Pathshala with Kunal Bothra. But for now, we'll take a break on this edition of the show. Stay tuned, more on the other side.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all,